Good afternoon. This is Chris Robinson with Robinson Ag Marketing with today's post-close grain comments and livestock comments. Well, some short covering before the report. Will it extend through Friday? I certainly hope so. I work with farmers and producers all the time, and we absolutely positively need this rally to continue. December corn stayed, it's been in this range for 10 days, right? So we're back to the 420 level, which I've talked about in my letter time and time again. We settled at 419 and three quarters, up 2 3/4 cents. 11 o'clock tomorrow, it's game on. November beans back up to 1033 after trading down to 1022 and three quarters overnight. Finished the day up 8 cents. Again, just felt like more short cover. And you got to remember the funds are already long a little bit of beans. They may have bought more beans here heading into this report. December wheat went down and made a new contract low overnight, then bounced 10 cents. Wheat is probably the most difficult trade right now if you were trying to certainly if you're trying to day trade something, you really have to be very disciplined. If you're a producer, I mean, what do you do when you're at 5-year lows? You maintain your puts. I will say this: anybody that's been working with me for the whole year, we really got after it, and hedged a lot of stuff when we were higher earlier. Not because I knew the high was in. I don't play that game. Please don't think that I'm that person. I know when we've had a dollar rally, you want to hedge it. That's it. If you hedge it, you keep the upside open, you're still in the game. 2025 has been very disappointing. The rallies that we have had were short lived. And here we are, with wheat at 5-year lows. So I'm not blowing smoke telling you, oh, trust me, I know where we're going. All I know is if we do get an opportunity, we're going to make some better cash sales. If you're going to store it, don't just store it and ignore it. Keep a floor under it because there's nobody out there um, that can promise you that we don't continue to slide lower. That is why we hedge. And most farmers and producers, you're a net long speculator. You're like somebody who's standing in the pit 30 years ago and all you did was buy, and you never thought about the downside because you can't, right? Otherwise, why would you plant the crop? So I get it. You're always bullish, but now more than ever, it's going to make sure you have a plan in case these rallies do not last. So that's how I'm going to leave it. We will hopefully reprice higher tomorrow after the USD report. I don't know where we're going to go. Nobody does. Pretty much all the fundamentals out there are known to everybody. The last time we had a report on August 12th is when we made our low in corn. We came out with the huge numbers in corn. It actually was a little bit friendly there for beans back there. So again, I'm optimistic, but I'm not Pollyannish. Okay, so defend. Keep your upside open. If I'm an end user, if I'm somebody that seeing $5 corn again would hurt me, boy, they're daring you to get some calls on down here. If I'm somebody that uses a lot of meal or bean oil, especially if you feed a lot of meal out, you know, what do you think is going to happen if beans are able to manage a 50-cent rally? You think meal is going to get cheaper? That's not. So, there's your hedge. Moving on to the livestock, we broke $13 in fat cattle in 10 days. We broke $22 in feeder cattle in 10 days. So to have a bit of a bounce, it's nice. We need more of it. But even right now, we are at or near all-time highs. We're 234 in these cattle. The contract high was 243. I'm not going to quibble over that. It's still something worth protecting. We did have a good technical bounce. We'll see if we get some more buying there. Certainly over the last 10 months, every time we've had a correction, it's been one to buy. Sooner or later, that pattern may stop. A lot of people have lost a lot of money trying to guess patterns, pattern recognition. If you look at October feeders, again, it wasn't that long ago. We were at almost at 370. We hit 369 and change, 369.30, and then we promptly fell. In 10 days, like I said, 20 bucks down to 46. We did manage to claw back above 50. We settled at 52.35 today, but I think a lot's depending on what happens tomorrow with the USDA. If we get a big swing there, you may see some readjustments. You got to remember the funds are bet pretty well long cattle, feeder cattle, and the hogs. April hogs out there, May hogs, all the deferred were slightly lower. Oct and Dees were slightly higher. You see more of that spreading going on. I don't know what your time frame is as a producer, but I know if I look out there to April hogs and we're at 93 cents, back in when we had our tariff collapse, right? April 9th, 2025, we were down at 75. So is that $18 worth protecting? I think it is. Again, the same idea. You don't, setting a hedge is not calling a top. You're already bet long, right? So the only thing that can help you is to see um, lean hogs, continue this rally. That's what you want. What you want to do is play good defense, defense, defense. You got to look at these puts as like your goalie. Um, if somebody's trying to take a 3-point shot on you, you want a new ball down there, slapping it away from the rim. That's what the put is. The put will stop you from losing money on paper, especially if you're holding something that you can't sell. You've got to hold till you market it. So that's the put is your best friend in this market. So that's it. This is Chris Robinson, Robinson Ag Marketing. I hope you had a good day. If you are looking for help with risk management, if you don't understand options, if you're curious, want to learn more, my background, I was a floor trader from 1992 till 2009. 2010, I started working with farmers and producers. So for 15 years now, I've worked with farmers and producers. I think I can help you. I certainly look forward to talking to you. I make suggestions. You guys make decisions. This is Chris Robinson. Have a good rest of the day. Take care.